The Chicago Mercantile Exchange has changed some of its rules, and the soybeans have bounced back 64 cents and corn over 30 cents. Really? The one who is going to comment that is Jerry Gidel from Chicago, Illinois, and don't miss his comments about the weather in the USA right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Jerry, the CME group has changed its one contract rule and limits the soy complex doubles in the whole complex. So, how do you think that has affected the market during this week?
I said the CME has had a long tradition of making sure people can play in their game at all times, and they have come up with these rules that I think of sometimes can be kind of detrimental to their investors and the prices that are being determined. This week, particularly, we've had quite a roller coaster situation. From there, the information from this month's June USDA report may be slightly negative, and the beans, since they did increase the carryover stock from 120 to 135 million bushels. I thought they would probably see them also increase exports, but at this point, that wasn't the case on what happened. So then, as we started this week, we had the technicals start to break down. The July beans took out $15, and then we've had projections of rain and talk about the U.S. Biden administration possibly coming up with some way of helping the small oil refiners because of this whole evil REN situation that's plagued them for years, that type of thing. So, but the real factor of this thing is we ended up, I think, added to the thing was that the forecast of rains moving into the central U.S. Set the thing off on a negative tone, and the magnitude of the break got increased because of the fact that one of their rules that they put together in this thing, not just recently, it's been around for a while, and that is that they said if there's any one contract in the soy complex that's at limit, we need to open up all the limits. Soybeans, which were 70, could be $1.40. Meal could be, I think, was $70 on that, and the same thing on bean oil. But the interesting thing about it is that I think a lot of people didn't even realize that the limit had changed, and then turned around with our investing community here. Unfortunately, in the commodity world, has really come to the managed fund approach, where there isn't the small speculator or farmers in the market, but they are really not the driving force anymore. It's between the commercials and the managed money. And they tried this thing on a technical basis, meaning that the chart patterns are their key factor. So when things started breaking down, things really, momentum really sent things down on a super defensive tone there on Thursday. The weekly export sales didn't help either. They were pretty minuscule for both corn and beans. And so but at the same time, the weather that was being projected, that was going to really move into our area here in Northeast Illinois and on through parts of Indiana, Ohio, last night, was really the factor that I think the people are watching here. We did have some showers around in the Western Corn Belt earlier in the week, and that. But the interesting thing is that particular storm system didn't come to fruition. It rained heavily in southwest southwest Wisconsin and parts of that state, but I got less than half an inch here in Chicago. And they've also eliminated a lot of the heavy rain potential. There's some showers around the next few days, but nothing to that extent. And the key thing is that the crop conditions that we're going to see on Monday here are likely to further decline. And that was one of the things that really kind of set the tone here this week when we had some substantial declines in corn and beans. Instead of a couple percent in corn, it was down 4%, and maybe 2 to 3 in beans. It turned out to be 5% down on that good and excellent conditions. And so, wow, I think I'm not sure we're gonna see 5% on beans and maybe another 4% on corn, but I think we're going to be down some on these Monday morning numbers because of the fact that the latest information or latest weather situation didn't turn out to be as helpful on the crops as anticipated here earlier, and particularly yesterday in the emotions.
One colleague from Kansas, one of your colleagues from there, his opinion is that the market has not fully priced in the South American crop reductions. So what's the cap for those prices?
Well, I totally agree with my fellow analyst there in Kansas, and that it has to do with the fact that it's a long ways away, and the South Americans are emotional, and oh God, they're going to be way too low on their number, and all this stuff. Long-time traditions, not reality, but that's something that has prevailed for many years, and so. But I agree that the 97, 98 million numbers that are floating around in the government world, I think are not really reality. I think we're a lot closer to the 90 to 92. And that significant number is going to be an impactor, particularly in the corn. We're talking the corn carryover, corn crop. And sometimes I just put these numbers in my head and don't describe what I'm talking about. But in the second crop corn in Brazil definitely has been hurt. Unfortunately, we haven't had enough harvest to get that really ingrained into the numbers that are coming out of Brazil. But I think it will. And I think the other issue is that a similar situation in the U.S. I think there's still an idea within the investing community and other people is that, well, this only needs one rain. It'll be fine. The world will come back, this kind of stuff. When you're talking about areas, basically, this is an easy scenario of dividing the country between the Mississippi River, west and east. If you're west of the Mississippi, you're running anywhere from 7, 8, maybe even 9 inches behind your normal set of moisture levels that you should be having in the first half of the U.S. crop or U.S. Calendar year. And that is not something that a half an inch or an inch rain and then not wait and then heat coming back or no particular additional follow-up doesn't really do you a hell of a lot of good. And so I think that's the other feature that's a factor in here. I think that might have also came back with some of today's rally that people looked around and says, wow, there's not that many areas that got much rain. And that doesn't mean that we're destined to, have a terrible drought in the U.S. But right now we don't need a U.S. yield at, like 170 or less to make this market bullish on corn because of the fact that we just discussed about South America's crop being still maybe not truly identified. And then the fact that the demand with the Chinese still trying to recover their feed sources and that. I know that they said they've bought some wheat and all this other stuff, but in reality, when you're talking about the things that they want to improve their meat supplies, and pork is their particular meat of choice. It's not like they are going to go out and kill their water buffalo or their oxen to have some beef, they're going to end up having pork and chicken. They really prefer pork even then. So I think that's a real big factor in this thing is that we still got a lot of time to go. And I know that we'll have some ups and downs here, but I think yesterday we really got overdone with the fact that we had to be very frank, I've never can remember a dollar, was it 18 cents, 16-cent decline in soybeans on a 1-day basis. I've been through many limit ups and limit downs, and we've had multiple days of them. But the new phenomena is that we open it right up and double the number, and that's. That doesn't mean that it's been the biggest break ever, but a 1-day setback, that's right up there. If it's not, it's got to be right there.
You got some issues with the wheat crop in the US. We got issues with corn. Corn needs rain, oh God. And we need rain for corn in Brazil, in Argentina, in the US, in Ukraine. And soybeans, we have a lot of demand from China with these new cargoes, and we have strong demand for corn, for sorghum. So it seems like a perfect storm for prices.
Oh, you mentioned many of the reasons why this market's still going to be quite volatile and could have some significant rallies in this thing. And I'm glad the soybean situation, the weather is not as crucial, if you want to say that, to the soybean crop and the prices right now, because of the fact that soybeans have this kind of innate ability when things get a little hot and dry, they just kind of molt, as they say, or in essence hunker down. I use the term from the standpoint they just kind of sit there and kind of shade themselves and kind of wait for some moisture. And it can hang. Now it's not good to do this when you're 6 inches tall, or 8 inches tall. You don't get much growth because number of beans on a plant depends on how tall it is too. And so, but it's a really big factor that happens a lot in July and August, and then you can wait for a rain and come back. But I don't know. The key thing was, and you mentioned it, is that the Chinese, those wily fellas, decided that this was a good break to buy some stuff. They bought 8 cargoes by all rumors that showed up today. Now it's not so much new crop beans, or they are new crop beans and not old crop beans, but it's purchases, it's value. It's, we've really, for practical purposes, we went from $16 to $13 in prices in very short order. Maybe not in the last week, but it's still an unbelievable setback in a relatively short bit of time. Now I know that the summer contains and the weather systems are part of it, but I really feel that the U.S. Base crop situation is far from determined at this time. Now I know that we do need to end up making sure that that we keep a close eye on this developing situation, but about how this crop is coming along. But at the same time, I wouldn't say that I've seen enough rain at this point to give me a guarantee that we're going to end up having even trend line yields at this point. And you've already heard my attitudes about the USDA trend lines. I think they're both too high because of previous approaches to things they've done in the past. But right now, I'd say, and I've actually seen now in the last few days, there's been people popping up with their current theories about the size of the yields for this year. And they seem to be a lot of them in the 174, 175, maybe highest 176. That's 3 bushels less than the USDA's trend line yield. And I think that's reasonable. The problem is we don't need a crop size any smaller, yields, I should say, any yields smaller than 175 at this point. That'll put a tremendous pressure on the world and the U.S. and how to ration that crop size if it's a 174, 173 cat crop from there. So, we got a long ways to figure that out at this point.
And what commodity would you have the best upside in the coming weeks, in Jerry's opinion?
That's an interesting one. I kind of feel like corn is still because of the importance of the growing conditions that are right ahead of us here, and the interesting thing about the U.S. In general, the growth of a U.S. and world corn crop, people always get focused on the pollination period during, which is an important area because of the fact you're transferring the pollen from the tassel to the ear, and if you get too hot, it'll burn it, and you'll lose some. Your ears will turn into what I call popcorn ears, and they won't be nice and consistent and things like that. But the other part of this question, and it's developing here starting next week, and we're going to cool off a little bit on some of these temperatures that last next week. But the swing factor of what happens with these kinds of heavy high ridges and high temperatures, they kind of push into the Midwest and then they back out. And so that right now that kind of suggests that maybe by the end of next week and the week after is we're going to have another surge of hot weather coming back to the Midwest. And that timing, it could be particularly poor if we haven't seen any kind of beneficial rains, because a U.S. Corn crop is also determined on how big the ear is, how many rows around there is, things like that. And that is determined before, 4th of July normally. It's not determined when we get the pollen going down the silks to the ear. And so that's another feature. So do I think we're going to make a new high? That's probably a pretty crazy kind of projection. Having a chance to see something here back towards $7, I think makes some sense. It's really going to be difficult for people to market their grains in this emotion because there's so many uncertainties this year, and it makes it difficult for anybody to decide, I need to market some grain. If you've been fortunate enough not to sell anything, excuse me, up to this point for the 2021-22 year, you were very astute and decided that these prices were always going to be going to the moon. Then maybe you should be jumping in and making some sales on basis that new crop when we get back up to in the $7 area for July, and that. Because interestingly enough, the spread between July and Dece has narrowed here because the people's concerns and even the investors have moved a lot more into the December contract because July is about to expire here in couple 3 weeks. So that's the other feature, I think. Soybeans, I think it'll still be with us. Interestingly enough, that wheat market you mentioned is going to be watched closely here. Harvest is just getting started in the U.S. It's a tricky one. I've heard problems because of too much wet weather. I've heard some dryness that's come back and hurt some of these crops. And the other twist of it is we've had some cold weather earlier this season that also potentially could have dinged things up. But in general, this year's U.S. wheat crop is going to be bigger. The one that's not going to be bigger, though, is the spring wheat crop. And the overall total bushels in the U.S. could be like last year or less, even despite with a bigger winter wheat crop in Kansas and Oklahoma.
And Jerry, we even didn't speak about inflation because of this crazy Friday.
Mm-hmm. Well, that's the inflation concerns are there. And I think that's part of the other factor that kind of dinged us around this week is that the U.S. Federal Reserve chairman in his monthly updates or one of his statements or written materials came out with a very tough approach, talking tough, I should say, about inflation and that type of thing. I guess the one thing that it's a little early in this cycle of trying to get the U.S. back and going in that. So sometimes the Fed talks a lot tougher than their reality is. So, but that mindset definitely hit the equity markets. It raised the interest rates. It knocked the metals down. That was the other factor this week that kind of jumped into this thing to add more foot confusion and fuel to the fire here for this setback we had midweek.
Well, I think that was it for now. Thank you, Jerry.
Well, we covered a lot of ground in that, and next week we get looking close at the stocks reports and the acreage numbers ahead of the June 30th scenario. At this point, it's going to be interesting. The expectations are for a pretty good jump in corn acres and a slight jump in soybeans, and stocks reports always can have a few curves in them. So we'll have plenty of things to discuss and see how the market wants to digest it.
Thank you.
You bet. Have a good day.